Bitcoin meets a wall of resistance. The question is, can economic news fuel a sustainable rally? Hey guys, it's Keith Allen, and things are changing here in the order book as we have had a little bit of a bounce here off of the price action. So let's go ahead and fade out of the music and talk about what's happening here, because we've seen some significant changes. I actually wrote a pretty extensive analysis this morning, and between the time that I wrote it and the time I've had the chance to do the live stream, things have changed a bit. So I've made some adjustments here, and we're going to take a look at what's going on here. So let's start here where we left off on yesterday's analysis by looking at the Bitcoin daily chart here. Let's switch over here to TradingView and take a look at this structure that we had been trying to figure out if we were going to have if we were going to validate this structure, validate a breakout, or invalidate it. And we had spoken about this zone right here, right? We have the trend line, we have the 100-day moving average. And this is where things got interesting last night before the daily close. We did see a wick down below the 100-day moving average. And I had said at the time, any wicks below are signs of weakness. We have seen that time and time again. This was a perfect illustration of what I mean by that. If we look to the breakout attempt of 69K, which was the 2021 top, right? Look at all the wicks below, and those led to eventual breakdowns. Again, we had tested, broke down, again, retested, broke down. And so similar set of circumstances here, right? We tried to break out, couldn't happen. And so at this point, didn't mean to do that. At this point, we have a situation where we wick down below, and then today's daily candle opened below that line. Also within that 24-hour period, there's been an intersection between the 100-day moving average and the trend line, the top of the structure here. And for me, the priority in terms of what's the stronger technical support goes to the 100-day moving average. And the reason for that is, lines on charts, as we say, are subjective. And there's no subjectivity to the moving averages. They are what they are. Let me turn this off and not have any more of those disturbances. Okay, so this was, obviously a concern here. Now, this morning when I woke up, things were hovering here between the trend line and the 100-day moving average, slightly above, slightly below. And now we're seeing a rally occur. Why are we seeing this rally? Well, I'll tell you why we're seeing this rally. We're seeing this rally because we had economic reports come out this morning. And let me just give this a quick refresh. We can see that the initial jobless claims came in hot. This is a situation where bad news equals good news. Not only did they come in hotter than the previous report, they also came in substantially hotter than what was forecasted, as did continuing job claims. Let's see, those were actually on par with the continuing claims were on par with what was forecasted, but a little bit higher than previous. The 4-week average also hotter than expected. So the fact that these were hot, this aligns with what we saw last week, where we saw the unemployment numbers bumping up just a bit. A lot of times, and this has been kind of perplexing throughout the past year, where the weekly jobless claims and the 4-week averages don't seem to align with increases in unemployment. There's only been a few increases in unemployment, but the fact that they're happening is a sign of what really the Fed has been expecting and what the Fed has been wanting to see. So why does the market rally on bad news, bad economic news? Well, because this aligns with what Fed Chair Powell said to us last week, which was, inflation. They had made a great deal of progress on inflation, but that progress had seemed to stall. And then, of course, we saw those unemployment numbers come out later in the week. And that was an indication that, hey, maybe the stall has been broken and things are back on track in terms of how their policy is affecting the economy. And so this lends some validity to the fact that the unemployment numbers have bumped up a bit. And so the market is responding to this because they think it means there's a better chance. This increases the chance of getting some cuts this year. and decreases the chance of a rate hike this year. So that's how the market is interpreting this at the moment. For me, we still, there's still no denying the fact that this was broken, right? And so, can we get above this? Do we have enough momentum to try and rekindle this rally and try and validate a breakout? Well, to do that, we got to go level by level, right? And what do you consider a breakout? For me, to give this structure validity, right? A falling wedge is notoriously a bullish structure, and we did this yesterday. For anybody who missed it, I'll do it again. We look for a measured move, right, from the widest part of the structure. If that breakout were to happen from here, that would take us to just above 70,000, 70.5K roughly, right? These are ballparks. And my line's not perfect, right? So somewhere in that neighborhood. If this validates, right? So to do that, we obviously would need to reclaim this 21-day moving average. We would then need to reclaim the 50-day moving average. And the fact that these are crossed obviously is something noteworthy as well, right? We want to see these moving averages unwind in a real bull market. And so then we have to get, if we can get past this, then we again have to go after this 2021 top at 69K. It has been very, very difficult to break and sustain. So we'll need to start printing full candles above that to have a legit shot at going after the all-time high. And this, of course, is where I believe price discovery really happens, is when we move into new all-time high territory. So, stands to reason that liquidity is an issue, right? And liquidity obviously is something that has great influence on what's happening with price action. So let's now, before we talk about the downsides, potential downsides, because we are, of course, rallying out of this dip here at the moment. Is this going to be sustainable, or is it going to revert back down and start testing these levels? If we go lower, where do we go? So obviously we have this range of prior historical consolidation in this 58 to 60K range. We do have some history here, and we do have some liquidity there. If things break down further from there, then we start getting into obviously this critical support zone. And sure, we have the trend line here. We have the lower low here, which to me needs to be defended. It must be defended. If we see price, if bears are able to push price below this low, which is at 56.5, then we start really exploring the possibilities of going downward. In fact, what to me is even a more critical level would be this 21-week moving average. For me, this is the most critical support zone on the chart. You can see it is getting closer and closer to this lower low, right? And this will change obviously every week. This is on the move. So if price continues to push up, then this could conceivably push up above this lower low here. So we have to keep an eye on where that is. This, of course, would be secondary support, but obviously losing this invalidates the entire structure whatsoever. And then we have to look at prior consolidation zones. All right. I want you to remember these levels, because we're going to look at them in a minute on fire charts, so we can see how the liquidity correlates with these areas, or does not correlate with these areas. 50 to 52K. This would represent roughly a 30% correction from the all-time high, which is up here around 73,800. If we were to make it down to here, you're talking 50. That puts us in that 30% range. And the problem is we didn't spend a whole lot of time consolidating there, right? On the weekly or monthly chart, it's not very significant. Obviously, it's important because we did spend a little bit of time there, and we do have liquidity stacked there at the moment. So I'll show you that in a moment. And then, of course, there's this prior range of consolidation, which to me is one of the stronger levels that we've had on the chart. This would be if it went to 40, 45K or so, 44 to 45K to me is the sweet spot. That looks like a 40% correction from the all-time high. This, of course, satisfies those of us who have been calling for deep corrections prior to this bigger move. Yes, even after the halving. So the issue at the moment is, where's the liquidity, right? Because liquidity is what is going to determine where price moves. And at the moment, remember these levels, right? 58 to 60, 50 to 52, and 44 to 45. So let's go ahead and look at fire charts now and see where the liquidity is and where it isn't. And the first thing that I notice is all the liquidity movement here, right? I had shown you earlier in the week where bid liquidity from this 50 to 52K level had moved up into this 58K level. So that is significant enough. Remember, 50 to 52 is where we go if we lose this structure, and 58 to 60 is where there is support, and that is, of course, above the lower low, right? The low is at 56.5. So that's somewhere in this range right here. And you can see we do have some bid liquidity stacked and a little bit more coming into this range to potentially defend that. But you can also see how we got here, right? We had ask liquidity coming from above, push things down. And let's move in on time frames, and we can see some of the more granular moves here, right? This was pushing price down. And now, suddenly that we have this inflation report out, we have this economic news out, it's been lifted, right? So the deep concentrations of ask liquidity that have been holding price down and pushing price down are now being removed or raised. And that creates an opportunity for price to shoot back up. I would warn you that this could potentially be a trap. And the reason that I think it could potentially be a trap is because, of course, we have lost this 100-day moving average. Yes, we have it at the moment, and we could conceivably see things continue to trend here in the right direction. Let's see where this 21-day moving average is at 63.2. The 50-day moving average is at 65.7. So what did we say? 63 and 65. Let's see what that looks like here, right? 63K level. Obviously, we have some resistance here. Not a lot, but it's about $9 million at the moment. And at 65K, which has been pretty strong, it's about 13.5 million. Okay, we've been looking at this area up here between 65 and 66K as strong resistance over the past week. And that's kind of where things topped out at the moment, 65.5. So will we get another shot at that, or are we going to see a reversion and go back and test this 60K? Remember, 58 to 60. Look, there's 10 million at 60. There's 15 million at 58. Not a ton of liquidity holding things up here. Things start to beef up as we move lower. 55 to that 58K level does have some more bid liquidity in there, insulating this lower low. But really, it's not as heavy as I'd really like to see at this point. So these are all things to keep in mind and consider as we move through the day and through the week here, right? Tomorrow is Friday. We, of course, will have the weekend, which has been giving us some a little bit of volatility here this past weekend. Real quickly, let's take a look over at ETF Flow, and we can see that yesterday, let's get a refresh on this and make sure it's updated completely. Yesterday was net positive, but barely net positive. It was all came down to one entity in the BitB purchase of 11.5 million. Nobody else bought yesterday, but also nobody else sold. So these are all signs to me that the ETF market is maturing, and they're playing the market, and they're playing the charts just as the rest of us who are trading spot are trading. So this isn't surprising to see. It's actually a little bit encouraging that it wasn't just a crazy sell-off, right? So I think this kind of points to the fact that we have to be getting, well, we don't have to be doing anything, but I think that we're getting close to an area of establishing a bottom here. This is a pretty wide range. If you're leveraged, this could obviously be very, very painful here. But I at the moment, just based on the liquidity that we're seeing in the charts, I would be surprised to see price go lower than this range here, right? sure, 50 is a possibility. But you can see the sentiment has shifted from this 50 to 52 range up closer to this 58 range. So maybe it's the 55 to 58 range that serves as the bottom. Right now, we do have a local bottom at 56.5. So we'll have to see if this is going to hold as things move forward. At the moment, we looked at that 45K range. And at the moment, let me zoom out to a wider chart, and you can see that we just don't really have much in terms of liquidity-based sentiment there at all at this point, right? There's a little bit. I can push the contrast here, and you can see that there's a little bit there, but not a lot. Right now, the story is that the heavier concentration of liquidity is on the ask side. It's above us, and it's between that 63 and that 65K level. This is the immediate interference that we're running into. But a lot of this has come down from up above, right? So there is a limited amount of liquidity that they have to drop on price, right? It's going to get absorbed, and it's happening. But until we see the bid side become the brighter side, as we did here, as we did in these instances here, then we can expect to continue to range until Bitcoin finds its footing and really makes a substantial run at a new all-time high. Hope that helps you out and gives you some insight. At least that's what I'm looking at. You can see buying happening here. Whales are buying here at this moment. Purple whales are buying. The brown whales, by the way, are not. In fact, those brown mega whales have been buying significantly through the week, and they've sold now almost 20% of what they've purchased over the past rolling 7 days. Worth noting that purple whales are historically the ones that have had the most influence over price. They did sell the local top, and now they've bought the dip. That's how you make money in this game, by the way. So again, hope that gives you some insight and helps you figure out how to approach things as we continue to watch candles develop and Bitcoin fight for the range. And, eventually we're expecting this to turn into a post-halving full bull market breakout, but we're not there yet. Be patient, be in tune to what's happening and what is influencing price action, because it's these little catalysts, whether it's economic news, whether it's geopolitical news, whether it's something that we're not even considering, falling out of the sky, coming to influence the market. The market seems to be sensitive to what's going on in the world and the economy, and that is obviously influencing price. So at the moment, we are seeing some buying that looks pretty strong, and that could push us up here to 63, potentially into the 65K range. I'd be surprised to see us clear this level, to be honest with you today, without going back to retest support. But I've been surprised before. If we get roof pulls like this, obviously that makes it easier, right? So this is also something that could potentially happen. Lure in more longs up to 70, and then reject from there potentially. So again, that's my perspective. Yours doesn't have to be the same. I'm just showing you what I'm looking at. And again, here's a perfect illustration of how they were herding price down by dropping these large blocks of asks down on price to suppress. Right now, it looks like we have just about 8.5 million at 62.5 holding things down right now. If we can get through that, then here's the next level at 63.5, and that correlated obviously with what we saw here on the charts, actually just a little bit below. So that's what I'm watching. If you like the content, please do me a favor, smash all the buttons, share a comment. I love the comments, and I absolutely engage with each and every one of them. So please keep things going. Oh, look at that. Have I had the wrong overlay going on this entire time? It's the bit break. Oh my God. It's bit break, folks. There you go. I'm working it out. Help me out. I'll get there. Trust me. You know what? I hope you guys do like what I'm doing here. And if you have suggestions or comments or things that you'd like me to cover here on these live streams, by all means, please send them, put them in the comments, and I will be sure. And I consider everything. So my goal here is to deliver what you guys want. So that's what we're here for. Hope it's helping you out. Thanks again for spending some time with me. We will keep you updated if I see anything major developing throughout the day. In the meantime, trade safe, my friends.